Hello, traders. Nick Shaheen looking at Overstock. Okay, so I haven't updated the chart in a while, but I did share a couple of bullish trades on it. The best one was last year when markets were falling out of bed. I had a couple of theses running, one of which was to buy into Overstock and the transports ahead of the holidays. Everybody was worried about the holidays. Nice. My thesis was the holidays were going to be huge because of all the free money from the government. And indeed, those trades were really profitable, and then it fell off a cliff. So, what now? There's definite information in the charts. And the way I'm going to do it, I'm going to deconstruct my notes and update my chart, therefore, make the point. Is this a daily chart? Yeah, this is a daily chart, about a year's worth of data. So, first, this is a company where pandemic was great business. The stock was at its lows of the pandemic, $2.50. Before that, it was single digits. So the company was not doing well. If you look back, it was, it had its moment and then just completely collapsed and headed to nowhere. And then the pandemic comes, and they took advantage of it. You know how they say, don't let the crisis go to waste? They definitely put it to work. What do I mean? It's not like they took advantage of it. So look at this. This is the overview of the company, fundamentally. So wasn't going well. Now the sales are good. The revenues popped, but profit margins also gone well. Assets, debt ratios falling. That's that orange line. So the blue is assets, the other one is debt. Then more importantly, I think, because that's how you can feed your growth, is that orange line. Not sorry, the blue line, the cash from operations. It's basically what stops you from borrowing money and what you need to feed your own growth. And that was the secret to Amazon's success. Nobody talks about it. So total revenue 1.7, 1.8, 1.4 in 2019. So nothing to do with the pandemic yet. Suddenly the pandemic comes up and they're running at 2.5 billion. More here is the kicker. So price to earnings ratio is 55. That's not cheap, but it doesn't really matter because what causes the stock to go down more often than not is the perception. So price to sales, it's only one. So basically, if I buy the stock now, I'm only giving it credit for 1 year's worth of sales, which is not a lot of hope. So I'm not going to be disappointed from them. Okay, so let's put the drawings back on. All right, so this white line was the breakout, and boom. This was a risk of breakdown, and it happened. I guess we can take it out. It bounced, consolidated, went to the moon, came back, consolidated. So I do have here two notes that say resistance. You're thinking to yourself, wait, we're above. Well, that was put there way before because of that used to be resistance from prior history. So if I look back, this is the one that brought this resistance, and this one is from a higher point, like there, right there. So all I have to do now is just switch it out to being support. So this tells me that. How do I use this? If it's falling out of bed, hey D, if it's falling out of bed, I wouldn't capitulate out here. This is a proven bounce level. Therefore, if I get out here or here, I'm making a mistake. Like whoever sold it here made a mistake, tactical mistake. They have their own reasons. I'm not nitpicking anybody. From the charts, tells me don't get out. This whole zone is super solid. Look how long it's lasted. It's been tested. First, it was the problem here, and the breakout, it's been tested once, twice, thrice. Is that a word? 4 times. Quad. And it was going to be tested again. Now, if it fails for whatever reason, markets crash, I think it would need a whole market to crash or some really bad news and some like fake stuff. Then you can see it's not quite a head and shoulders, but you can see that when you defend the neckline this long, losing it is a very big deal. So if for whatever reason it loses this, it's going much slower, but this would be the improbable scenario for me. So if I would bet against it, how can I bet against it? I would sell a put spread anywhere down here or sell naked puts to own shares. Do you hear that last part? Own shares. I don't sell naked puts for a trade. I sell to own shares. This also, of course, is I feel silly doing it, but there it is. So right here, it's toying with resistance, and it's also the opportunity. I don't know how big of an opportunity it is. I think this one would be a bigger bang for the buck as far as opportunity if they can break above that 83 and change. I don't like this. It's overhang. So whoever got stuck here is going to be active selling. So if I'm long from here, I start tapering. So if I get to here, I definitely lock, if not book everything, and then buy it above that. This candle worries me a little bit. So the edges of it mean something. So starting 80, I start at tapering. I'll give you an example of how I can do that. I was long AMD calls that I shared with the people, the members, and I got the rally I wanted. So the call itself was really profitable, but instead of booking it because I still like the stock, I can sell calls against it and turn it into what they call a diagonal. So my calls are long in June in AMD, but the same spirit here, somewhere here. And so I sold, today is the 9th. I had calls that expired today at 83.50, which expired for maximum gains. However, I did buy them back for pennies in the morning. I didn't want to deal with the drama all day. But had I left them, whatever I collected for those calls died for maximum gains. And it's a diagonal because I'm long at 82.50 and I sold at 83.50. So I still had room to wiggle. And I renewed the bet for the week thereafter at 86. So I have another diagonal for next week. So if AMD stays below 86, I coin more profits. Why do I do that? Because now I'm still long in June and it's still more than a double, and I still already booked almost $1 in profits because I've done this. This is the 3rd time. So I can do the same here. So if I bought a call down here somewhere, and it gets to a point where I want to trim, I start to look to sell diagonals. Anyway, that's the easy way to do this. The stock itself, I don't mind it. I do mind how volatile it is. The business is not that volatile. So maybe it says something about who's trading it rather than how it's trading. I don't know if it's part of the online chatters in the chat room out there. It shouldn't be, but whatever it is, it is. So I do have a chat room going, and it's about 280, 290 people in it. All kinds of trading styles are in it, and there's a link to it down below. Also, message me if you have any tickers you want to do videos on, and if there's enough requests, I will do those videos. So the chat room is not free to be in, but it's free to try out for 10 days. The link will take you to PayPal. But don't freak out. It's for absolutely $0. The only reason I do that is because for 10 days, and then you can cancel. Because I want to make sure that it's a real person wanting to actually participate, and I want to protect the 300 people or so that are in there. I don't want to open us up to trolls. And if somebody whips out a credit card, even though for 0 transaction, or this way PayPal tells me it's a real person, we know them, let's go. This is a decent opportunity stock. This base is a good place to get long. It seems like it's fairly early in the process of a swing trade up. My only concern is extrinsic. Fancy word. Oh, let me get those out of the way. It's this guy. Why can't we just rally normally? We always have to go ballistic one way or another. So these rallies are not pretty. They should come back and revisit this area. What does that mean? So if we fall 2.5% in the SPY, it's not a big deal, but CNBC will make it. We'll have a segment. Markets in turmoil. Is this the end of the rally? Headlines will start coming out. But then they come out of the woodwork, forecasting doom, and everybody will freak out down here, and that's where they need to not freak out. So if this happens, like if we've dropped 2%, is that 2%? Maybe a little bit more now because it closed insanely. Yeah, 2.5% will close this gap. it wouldn't be a big deal. Even if we just meander sideways and drop 1%, we can close this gap. So what I'm saying is Overstock has to trade inside the whole market. Let's say the S&P drops. This one may drop through no fault of its own. Now, I said that this is a zone. There are lines within the zone to pay attention. I guess I should have done that. Like this line right here could be an immediate trigger lower. So it is support, but if it fails, it might go S lost. There we go. It won't go that far, but it's potentially a trigger for panic selling from somebody. And I put panic in quotes here, like, you know, somebody's panic is different than other people's panic. So I guess we can get this out of there. Clutter. Okay, so this is the trade on this guy. Good. I like the setup. I would be very comfortable being short put spreads here. I would avoid the earnings, which is coming soon, or go way out. So the reaction to the earnings themselves have little to do with the actual results and more to do with the expectations. So you can see here it dropped a lot, even though the report was good. Here they had a massive reaction and they didn't know what to do with it. Here they rallied a lot. So it's a complete coin flip. I know some people say, no, they're going to clobber every metric. It doesn't matter. You cannot guarantee me that it will rally the next day. I could give you the P&L today, and your chances of getting it right are the same as me flipping a coin. It's proven over and over again. I can think I have an edge, but my logic is my own. I don't know how many are out there like me. Therefore, maybe we're all expecting the same thing. So I don't know how many are expecting this or that. Therefore, you cannot forecast the outcome of people's actions, not the stock results, like the company results, I should say. All right, that's it. Nick signing out.